I want to start by comparing and contrasting those two deals that I was just talking about. The Malartic sale to Agnico Eagle Yamana, $4.3 billion. That was 2014, 15?
Yeah, 2015.
2015. Finalized then.
2014.
2014. Okay. And then the Windfall deal just recently, $2.2 billion with Goldfields. So the Malartic deal. That was started by a hostile takeover bid from Goldcorp at a 15% premium. By contrast, the Goldfields deal, a friendly deal, a 55% premium. So, what are the similarities? What are the differences between the two scenarios?
Yeah, there were really no similarities. One was really nasty and it was hostile, and the other was a friendly deal with a lot of competition. When we sold Canadian Malartic in 2014. We were just coming out of ramp up. A lot of people, I know there are lots of people who know OSISKO in the audience here today, but we started that company in 2003. John Burzynski, myself, and Bob Wares. We acquired Canadian Malartic in 2004, November, for $80,000. We didn't have $80,000 in the company, we only had 50. We let go of 30 on the company. We were too naive at that point not to give ourselves royalties. For the money we just paid. But over the course of the next 6 years and 1 month, we drilled out that deposit. We moved the town of Malartic. We raised $1 billion and put the mine in production. And just as we were finishing the ramp up, Goldcorp called us up one day and said, "There's a press release coming out in 10 minutes, and we're going straight to your shareholders." And we bought them off for about 5 months. Agnico and Yamana came in. It was actually Yamana came in first, and then Agnico came in, and we ultimately sold the company. But when we started first OSISKO, the idea wasn't to find a project to sell. We were going to be the next Agnico, and as it turns out now, Agnico is the next Agnico. Basically on the basis of our complex. So the Malartic complex was a tired mining camp that nobody wanted. We were the only people who were bidding it in 2004. That's how we got it at $80,000. But if you think about it, there's somewhere in the neighborhood of about $75 to $100 billion worth of gold. So it's the best yard sale story I've ever heard. And we were trying to build an intermediate mining company. We've got Tesla from the audience here today from our Eurasia group. Part of how we funded it initially was we had a private group of investors out of Germany. Well, they were mostly out of Germany until we made a lot of money, then they were Swiss. But we wrote a business plan where we were looking to build a 100,000 ounce a year producer. We convinced them to put the initial money in. They put the money in. Bob came up with the idea of looking for a gold-only porphyry in the Archean. They didn't exist at the time, much like diamond deposits didn't exist in Canada 30 or so years ago. There was no such thing as a gold-only porphyry system, and of course there was, and that's what Malartic became. Nobody wanted to do a full complex. Sean and I had spent some time working in Africa, basically drilling off a lot of similar deposits where they mined out the high grade, left the low grade. And over the course of when those old high grade mines operated, the price of gold had changed. And equipment had become bigger. You could now get 220 ton trucks, you could get 400 ton shovels. So really what we did in Malartic was just reimagined the inputs, because the deposit was always there. We used to use the ham sandwich analogy. When the commodity price was lower, they mined out the ham and they left the sandwich. So we came back, we just mined out the whole rest of it. But at this time, we did the fees at $775 gold. And by the time we poured the first brick, it was $1,900. So it made a lot of money. And this ultimately led to why Goldcorp came after the company. Was because it was going to be the largest producer in Canada and has been for a number of years. So that deal was going to be the foundation block of our company. If you look at every senior producer or intermediate producer on the planet, they all have a key asset that they build the company around. And ultimately, that's what we were going to do. So when we sold the company, part of the deal was we ended up with a 5% NSR royalty, which formed OSISKO Gold Royalties. And all of a sudden, we were royalty guys. And for about a year, we kind of did some of that. I got tired of doing that, so I broke off and formed OSISKO Mining version 2. Sean successfully added about 100 more royalties over the course of the next 3 or 4 years and built a royalty company business up. While Bob went off and started a base metal company at OSISKO Metals. There's a German. I ultimately sold Windfall, which by comparison was a similar task to Canadian Malartic. At Malartic, we had 17 drills, we did 1.5 million meters. So at Windfall, we decided that we put 37 drills on and drilled about 2 million meters to define another world-class deposit. This time a high-grade underground. And thanks to Ron Burnbaum, who's in here, we did about $500 million worth of business over the last 8 years or 9 years. And proving how critical that flow-through money and that charity flow-through money is. I mean, without access to that in a market where there wasn't a gold market, we wouldn't have drilled off the deposit. And by comparison, while we're comparing, we did all of the drilling in Canadian Malartic with traditional flow-through. So both of those deposits are basically case studies on why the flow-through system is so important in Canada. But so we drilled off Windfall. We were looking at doing a debt finance to build the mine about 3 years ago. And we successfully put together a syndicate of between sort of 800 and 900 million with the major pension funds in Canada and Quebec. But ultimately, the interest rates is what dissuaded us from going that route, because senior secured debt was going to be 15% and sub debt was going to be 17%. We would never hit a dividend. So ultimately, we chose to bring in Goldfields. They became a joint venture partner. And then ultimately, that led to other interest from other companies, and we ended up selling the company last October for $2.2 billion. We could have built it, but it was a friendly deal. It was very competitive. There were no bar fights compared to the first company. There were, and it was a much kinder, gentler experience, I guess, than opposed to the sale of the first company.
And John, you said the company sold to Goldfields for a number of reasons. It was all cash. It was an immediate outcome for shareholders. It eliminated any future risk. But you also said that, and you described OSISKO mining as a struggling explorer, and it was difficult to raise capital. So can you elaborate on that aspect, even though you have that asset?
Yeah, I didn't write a single word on that. I think that was the purpose of the, when you're doing the press releases as you're going through selling the company, a lot of that was probably suggested language from legal advice. We weren't struggling for capital because we raised $1.2 billion over the last 8 or 9 years. And then when we brought in Goldfields, that would have provided another $1.2 billion. But the thing is, shareholders in the last 2 to 3 or 4 years haven't had a lot of wins in their portfolios. I've just come off marketing efforts, basically in the US, Europe, and some other places in the last 4 to 6 weeks. And surprisingly, at peak gold prices, a lot of the bigger funds are still seeing outflows. They're not seeing new capital come in. And you would expect with gold nearly at $3,000 an ounce that people would be throwing a lot of money at these funds, and they're not. Same case for copper. You've got copper futures looking at 470. But still, there are more outflows than there are inflows in a lot of these funds. So there is capital available, but it's still very, very selective. So when we go back to looking at what we were going to do, we were going into a mine build that would have taken about 3.5 years. The shareholders were basically looking for that return that they would get in 3.5 years today. And ultimately, the shareholders are the ones who control the company, so we ended up selling.
So are you seeing any improvement in capital raising, or are there any green shoots or lights at the end of the tunnel, or not really? And why is that?
There's certainly more capital available right now, but again, it's very selective. When you look at the bigger funds on larger projects, typically the fund managers are looking for something to sell to provide capital to put into another project. So it's like choosing your favorite investment and then having to sell your second favorite investment to maintain that one. There's certainly a lot more PE money out there. There are people raising private funds. What I've noticed in particular over the last couple of years is you're seeing a lot of investment from corporates, certainly from royalty companies. And to get back to, many of you may know that we kind of lost our royalty company about a year ago. There was a fight at the board level. And I think part of the rationale was that we'd been making investments in equity into different companies, and the market didn't like that idea. But if you look at what's happening, part of the only money available to mining companies these days is coming from either selling an NSR royalty stream or taking an investment, a foothold investment from a larger company. It's funny too when you look at what's happening in the case of OSISKO Metals. We had a pure equity investment from Franco Nevada, and something that we were getting punished for as OSISKO royalties. I like to think that, and this was part of Sean's philosophy when we were trying to figure out how to run a royalty company. And I like to think he was ahead of his time, but you know what they say about being ahead of your time, it's a lot like being wrong sometimes. So it's funny to see that evolution of all the royalty companies doing this now.
I want to go back to Malartic because you've said that had OSISKO Mining kept half of the company, it would have been ultimately a better outcome for shareholders. Is that a bit of a regret, or not necessarily? Did you learn anything from that experience? Would you have done it differently?
No, and we regretted it very much. As I said earlier, we weren't trying to sell the original OSISKO Mining. That was going to be the cornerstone asset. So if you go back to 2014, when that transaction happened, you can imagine even if we only had half of Malartic, Agnico had half and Yamana had half. Ultimately, Agnico went and bought Yamana. We might have done that as well. But you can imagine with our half of Canadian Malartic, we might have then acquired Windfall. We might have been the ones instead of Tony McCooch to buy Detour, and then ultimately not Agnico buying Detour, but it could have been us. So we might have been that Agnico. It was all of those larger ideas kind of went away in 2014 when we sold the company. So yeah, I still regret that sale. But typically too, these are things you do when you're in your 40s. When you start being a little over like 60 plus, it's harder to build a large company with less runway.
All right, so nonetheless, two very impressive exits for the OSISKO Mining team, equaling $6.5 billion. You've touched on it a little bit, but how did you execute that? What were the keys to executing those two exits and achieving those outcomes? I know that a lot goes into it, but in a general sense.
Yeah, well, the first one was easy. We just got someone to pay more on the Goldcorp. It took about 5.5 months, but you mentioned their initial bid was a 15% premium from a weak share price at the time. Towards the end of 2013, all of the gold companies were trading down. It was a ridiculous price to try and acquire Malartic for. I think it was $2.3 billion in total, and ultimately we sold the company, including the royalty STUBCO value, for $4.3 billion. So there was obviously a lot of money still left on the table, but even that it was a real bargain for both Agnico and Yamana. In the case of Windfall, it was a very competitive process. If anybody had read the circular, there were 12 bids over the course of about a month and a half, 2 months between 3 companies. But there were a number of other companies in the background as well. Only formal bids ever ended up in the circular. So what the read through there for people in the audience is that it's a very competitive market right now for gold companies looking to replace declining reserves, or people that need to find an asset. Literally everybody is looking for something. And part of my thesis is that eventually all of these assets, and the very few tier A assets left, but all the tier Bs and Cs and Ds, they're all going to go in the next couple of years, because there's not literally hasn't been enough exploration over the last 20 or 30 years to find new resources. And just as a segue, and a little bit of personal promotion here, it's the reason that we went into copper. A lot of people ask us, well, you guys are gold guys, why are you doing the copper project? We're doing exactly what all the other gold guys are doing. They're all looking at copper projects now because they also realize there aren't a lot of tier one assets, tier one geopolitical deposits to fill the pipeline coming up. So they're going to have to go to large scale deposits and other commodities like copper. And instead of replacing declining ounces in the future, I suspect a lot of the gold miners will start replacing just cash flow. And the only significant deposits will be large copper deposits. So we're kind of on the vanguard. You're already seeing a lot of the senior miners make significant investments in copper projects around the world.
Just sticking with gold, away from copper for a second. The bidding war for the Malartic mine, OSISKO Mining at the time, you said triggered about 6 months, sort of a flurry of deals. How would you describe the current M&A environment right now?
Yeah, I'm going to use another Sean Burzynski from the time. Sean's got a lot of good one-liners, but when we got bought, one of Sean's stock lines was, every once in a while, one of the animals at the water hole has to go down so the rest of us can get a drink. We just never thought we'd be that zebra. So it did. It immediately sparked a bit of a month-long uptick in the business because there was that $4 billion recirculating now in the business, and you see that happen every time. The day that we announced that we were doing the deal with Goldfields, I think there were a handful of companies that went on 25, 30, 40% on that they're going to be next thesis. And a lot of those guys still owe us a case of something because they really jumped up in value. So, but what you're seeing is the effect of that capital coming out. People that don't want to wait for the circular, the vote, and then the cash showing up in their account. You're seeing that money recirculate immediately back into the market. That's something we need a lot more of.
You were saying, John, before we came up here, that you're always looking for the next thing. So, can you give us any sense of what the team might do next?
Yeah, again, we found it in Gaspé Copper. Do no small thing is kind of a credo that we've lived by. The Gaspé Copper project used to be one of the keystone assets or cornerstone assets of Noranda. It produced about 150 million tons of 1% copper. But like the ham sandwich analogy, they shut that mine in 1999 when the price of copper was 65 cents, and they left so far about 1.5 billion tons. We think perhaps up to 3 billion tons of 0.3, 0.4. So instead of mining it at 15,000 tons a day, we'll do about 150,000 tons. We're basically just repeating what we did at Malartic on a larger scale concept mine. It'll obviously have a larger capex, but it'll produce a lot more copper. And that is literally our next project. But are we looking at other things as well? Yes, we are. We've always had a pipeline since we started 20 years ago. There's this sort of famous list that Bob did up of projects in Quebec. He was one of the first ones to run a very simple algorithm through the Quebec Minister database, which was the most highly digitized database at the time. We had 12 targets that we were going to look at. The first one, Bob and I both worked on historically. We drilled the Kills on to the next one, which was a project in the urban dairy belt, but we couldn't get significant ownership of it, so we walked from that. That night, Bob and I drove down to Malartic, and we literally drove around the deposit, looking at the fences on the open stopes, because if we acquired the project from the bankruptcy trustee, we were going to have to pay for the fences. And remember, we didn't have much money, so we wanted to make sure it wasn't going to cost us. And that's one of the backstory reasons why we actually bought the property, because we could afford it at the time. Ultimately, when we ended up selling Canadian Malartic, I went back to that list, but I went backwards to the urban dairy camp because now Windfall was there. So over 20 years, we've come up with 2 world-class mines, and we still haven't gotten to project number 4. There's still a number of things in Quebec that
Right, so safe to say you're still sniffing around Quebec. Might it be gold? Might it be copper?
Well, it's copper right now, but obviously we're always interested in gold projects as well. The initial list was principally copper projects, but at the end of the day, large-scale projects that have significant cash flow profiles are in any commodity are of interest.
Now, in terms of gold itself, we know it's near record highs. We know that the gold stocks are much improved, but are you still seeing a big disconnect between the price of gold and where gold stocks are trading?
Yes. With a caveat, when we ran the first company from 2003 to the ultimate sale in 2014, and it always seems to be about a 10-year cycle. The second company was 2014, and we sold it last year in 2024. We had much more vibrant markets. We had a retail shareholder base. We had 75% more active fund managers running resource money. One of the biggest changes that we've seen in the last 6 or 8 years has been a decline by 75% of actively managed money. It's all gone to the ETFs. And as everybody knows, ETFs don't participate in financing. So you have 25% of the people left over to go and try and get financing from, and they're still seeing outflows. So that's been one of the bigger shifts. And sorry.
No, that was essentially at the disconnect between the gold stocks and gold.
Yeah, with this company, what happened was we had the same shareholders from the first company come in initially to raise the money to start Windfall. When we started drilling, we did a lot of work with the benefit of charity flow through. But we hit $1 billion valuation and we stayed there for 3 years, or 4 years, or 5 years. And the price literally didn't move. The first OSISKO, the share price just continued to go up. This one, it went up to $1 billion and stayed there. Then when the bid for the company came in, we re-rated to the value of the company 1x NAV, which is where a gold project in production, early production should be. So the market has changed. And I think as long as people are focused on real projects, you will ultimately see that value come into the project either once you're in production or when somebody comes to knock on your door to talk about potentially acquiring your project. It is a very, very different market than it was 10 years ago.
What do you think of the setup for gold right now, the drivers of gold compared to previous periods?
Basically shortages. Some of that, as I said, I suspect it's going to start being taken up by the larger gold miners looking at other commodities, principally copper. But there needs to be an awful lot of money spent on exploration. We're talking decades of huge amounts of money. My number for finding a million ounces of gold is about $100 million. We raised the first $800 million to find 8 million ounces in the ground in all categories. Which is where I get the 100 million for 1 million ounces. But the problem is nobody wants 1 million ounces anymore. They want 7 or 8 or 10 or 15. So it's become increasingly more expensive to find the money to drill off a deposit in a market where there are fewer large-scale investors to do that. So, one of the drivers has to be the increase in commodity, the scarcity, which will be driven by the scarcity of deposits, and ultimately it'll be self-correcting. But it's shown itself to be stubbornly disconnected, as you point out, for some number of years now.
Shifting to the T word, the Trump administration. So let's talk about tariffs and potential tariffs and what impact they may have on the Canadian mining sector. At this point, though, is it almost futile to try to assess what the impact will be because there's still so much uncertainty?
I'd go with that answer again. Specifically with what we're doing with gas state copper, we're unaffected by any potential tariff implications because as part of the deal where we acquired the property from Glencore, they ended up with 100% of the offtake, and the concentrates will eventually end up in Europe or China, regardless. The tariffs may have some effect, but ultimately, America is a big place that needs lots of metals, and I'm not sure how long tariffs are going to stay in place. Unless they can magically come up with a bunch of new mines that are very low cost and replace their growing demand. One of the reasons we like Canada and we were very stubborn about leaving Quebec to either look for things or invest in things is that it's a very straightforward permitting process. You know exactly how long you're in for when you make a discovery in terms of roughly, give or take a little bit, how long it will take to build it. I think the average time in the U.S. now to open up a new mine, and a copper mine anyway, is like 29 years. It's a crazy. I'm really looking forward to seeing how this is going to work out. I suspect it's going to end up in some higher metal prices all around. And I suspect that the tariffs, at least on the metals, won't stand very well.
Rob McEwen is in this room. You see him right over there. He has said, and we've talked about it before, the fact that it's difficult to attract young, smart talent to the mining sector because they have other options now compared to previous years. Would you agree with that? And are there solutions to that?
I thought that's why I was here. I'm being very facetious. Really kidding. That's true. We had at one point, I think, somewhere in the neighborhood of probably 40 or 50 geologists up at Windfall. And I remember when I was a geologist working on the field, I worked in Canada, a bunch of other places, Africa for about 10 years. Our typical rotation would be, 3 months out or 6 months out, and 3 weeks back home, and then you're back in the bush. Up in our camp is 2 weeks in, 2 weeks out. And the first question every new young professional asks before they agree to be hired on is, how's your Wi-Fi? If you don't have Wi-Fi, you don't get the guy. People can't be disconnected from their devices very long. It's more difficult, yes, Not principally because of Wi-Fi, largely because I think back in the late 80s, early 90s, they started closing a lot of the geology departments. Even at Canadian Malartic, we started to have quite a number of our technical employees coming out of places like Africa, because that's where the money was spent in the 90s. Those were the guys who had experience, and I suspect we'll continue to see that, where we have a lot of the demand filled by places where money's been spent over the last 20 years outside of Canada. We're going to start importing technical people to fill up the Canada.
Any solutions to this issue?
Donate a lot of money to Canadian universities and try and get the departments going again.
All right, there's one. We're going to be doing a Q&A in just a moment. And as usual, there are microphones on either side of the floor, so put your hand up and we'll get the mic over to you. So just lastly here, any final thoughts or bits of advice or words of wisdom for your peers in the room who are all advancing projects?
Yeah, sure. The principal one is don't listen to anybody. When Sean and Bob and I started OSISKO Mining back in 2003, we literally spent 6 years with everybody in the business telling us we couldn't do it. And everybody knew you couldn't mine a gram in Quebec. And you'll never move the town of Malartic. There's no way you guys can raise $1 billion. Well, you might build it, but you're going to break it. Well, we did break it. We fixed it. It caught fire. We fixed it again. And only when it started cash flowing, literally a very short period after that, so if you don't set yourself false objectives or hostile objectives, or you just push forward, there's nothing you can't do. Certainly, you got to try to find out. But, there was nothing. We were too dumb to know that we couldn't build Canadian Malartic, and now it's one of the largest gold mines in the world. Very, very simple process at the end of the day with a lot of work.
Is there anything I haven't asked you you'd like to talk about? Touch on?
I could give you a 20-minute presentation on OSISKO metals, but I'm not here.
Another time. All right, great stuff, John. Let's get to some questions. Let's see. We have one over here. Here's some. There you go, right there.
Thanks, Mark. Thank you, John. On the theme of not a lot of money going into exploration over the past 10, 15 years, and the fact that large gold producing companies are running out of reserves, do you see the larger companies lowering their requirements? Like maybe in 2010 you could take over a 5 million ounce project, and you mentioned earlier that they want 10, 15, 20, and that's just not going to happen because no money's going into exploration. So do you see the threshold coming down at all? Where do you see it going?
Yeah, no, I don't. I think ultimately what you're going to end up with is more like a monopoly situation where you have to pick a handful of very big companies. There's already been some of that consolidation at the upper levels over the last bunch of years, but I think you're going to just keep seeing the number of senior gold miners contract. This might take some time, but that's going to happen to a lot of it.
We have a question over here.
John, could I ask after what you comment also? You mentioned you're looking for big deposits. How about the graphite? 7 biggest in the world in Quebec.
Yeah, graphite's, I had some friends who worked in graphite back in the 80s, but we've tended as a group to stay with metals as a daily law. The issue we're looking for, I guess whether it's graphite or any of the non-coated metals, is you typically, before you start an exploration project, you should be talking to somebody who wants to buy the end product. Right? Because it's very tough to raise the money in a public market for something where nobody can really understand what the value of the project is. So if you have a line on an end user, then you're not sure it can viable. Without that, we wouldn't try it.
I'll come get your business card.
Thank you. It's been too soon. I don't have one when it seems about 3 times in the last couple months. Bob, come on over here, please.
Well, you change a lot.
You mentioned when we first met some of your key criteria for your list of 10 projects. So would you mind going over the highlights of the key things you were looking for? And are there any left? You could tell me the ones left after the audience is gone. Thank you.
Yeah, I'll answer the question. Yes, there are some left. But now I'm going to go right back and tell you a quick story about Bob Lamont over here, who just asked the question. Bob was one of our very first shareholders back in, I think it was 2005. He bought the original OSISKO stock at, I believe, a quarter. And the history of OSISKO Mining's share price was we were 10 cents when we started. It went up to $16. We split the stock to 8. It went back to $16. So if you had originally held the stock, it went up to the equivalent of about $32 a share, or about a 38,000% return. So Bob didn't quite get the 38, but he got most of it. And it was funny because we'd never met Bob. Bob's an investor out of Calgary, and we knew he was on the list. And Sean and I were in Vancouver one day, and we get a call. It's Bob Lamont, his son. And it's Bob Lamont. Look, your share price is at $3, and I'd like you to come to Calgary and explain to me what it is that I bought. He was trying to decide whether to keep the stock or sell it. But yeah, there are things left. It's funny, every time you think that there isn't another Malartic sitting on the side of the highway, because it literally was sitting on the side of the highway. One of the homes that we moved was the exploration manager from Agnico's at the time. He lived on the deposit, and he washed and had a shower, had breakfast, got in his truck, went out to look for gold deposit, came back and slept on it every night. And then, well, ultimately they got it back, so they did fine. Windfall was sitting there, and a lot of the people in the market knew it had these incredible high grades. There were some tremendous intercepts, but none of them made any sense because it was. The long story short was that the geological model was wrong. And when we got there, we realized it was wrong, and that's how we ended up making Windfall. Gas Bay Copper similarly has been sitting out there in the gas bay as a closed mine since 1999, and I'm certain this is going to be the biggest project we've ever done. There should be 50 or 60 billion of net wealth created in that one. To me, it's a repetition of Canadian Malartic, the Salmon Copper. And it should end up, again, in production by the end of 2031, 2032, no doubt. And there are other things there. Where the next one is so, next question.
Ron Stewart from Rexlab.
Hey, John, thank you for this. Canada is a resource-rich country. We're a leader in exploration financing. We don't have any of the world-leading gold companies anymore. The Dorendas and Falconbridges and Incos are all gone. What's wrong with our country that we can't have world-leading companies like you wanted to build with the OSISKO?
Yeah, well, you missed one. Agnico's doing pretty well. And again, Ron and I have known each other for a long time. Agnico, I think, is going to become the world's largest gold producer in short order. I think they have a specific stay-at-home mandate, and good on them. There should be more Canadian large-scale global mining companies. I was reading something in the paper about a week ago on our personnel thinking about redomiciling barrel to the US. Everyone is scrambling to avoid tariffs or tariff implications and things, but there's no reason Canada shouldn't have as vibrant and as large a mining business as anybody in the world. I mean, we're actually better at it. And apologies to all the Australians in the room who were better at it than. But yeah, it's my whole career has been watching these companies be sold off, which is why we were trying to start a new senior mining company 20 years ago.
Okay, we'll wrap it up there. All our thanks to John Burzynski. Thank you, everyone.